we would argue and argue all the time, right, that the assets should be in Canada, the keys and the control should be in Canada, and we should try to avoid as much as possible exposing ourselves to other jurisdictions.
Hey folks, Flo here with Blockchain North. We're still at the Canadian Bitcoin Conference here in Montreal. I'm here with Didier Lavallée, a familiar faces for many of you in Canada, from Tetra Trust. Maybe you just want to give us a 30 seconds introduction. And what are you doing here?
Yeah, absolutely. So I'm Didier from Tetra Trust. I'm the CEO. Tetra is Canada's only regulated trust company for digital assets. We're very excited to be in my hometown, Montreal, today. So we're at the Canadian Blockchain Conference. It's been a great day.
Right. You're straight off your panel, so maybe you could share a little bit of insights. First of all, what was the panel about?
Yeah, so the panel was about CBDCs and self-custody. We really didn't get into self-custody. We mostly got into CBDC. Very passionate group of Bitcoiners, right? They always think that the Bitcoin is essentially the best currency out there. The only thing people should play with. My view on the panel, which is still my view, is that CBDC are somewhat inevitable from an infrastructure perspective, right? At the end of the day, the banking infrastructure is highly fragmented and it's old, and CBDCs can play an important role in that. So I do think it happens. The other thing too is, digital dollars already exist. You have a bank account, you have a debit card, you have a credit card. I mean, there's an exchange in value that's already happening digitally.
Right.
So CBDC is just a way of putting all that activity on chain, right? Which should bring more transparency and more visibility into what's being done. So I do feel there's a place for it.
I was going to ask, actually, and you probably answered it already, but because you have a background in banking, let's say in TradFi, and now you're in the crypto space, what does it mean when people say, that crypto is digitally native versus, as you just said, currencies that are already largely digital?
Yeah, I think, people still have that concept of going to an ATM, taking money out, depositing a check, writing a paper check. Right, which is not far off of roots or barter economy.
Yeah.
Right? Which is essentially you give me a chocolate bar and I give you a couple of nickels or pennies. Historically, before that, obviously exchanging coins, golds, etc. I think people still view banks as I have my money with a bank. I have my paper money, fiat money with a bank.
Yeah.
And if I would, lose trust in that organization, I could go to the bank and say, where is my $100 bill? The reality is fractional reserves, etc., means that, the majority of the banks don't actually own that paper money. Right. Or that paper money is sitting somewhere in a vault that's really not accessible.
Meaning, just to be very clear, that if everyone went to the bank at the same time, trying to pull their deposits, that would be impossible.
Yeah, correct. And I mean, you saw that in the U.S. with a couple of banks last year, right? There's some very famous bank runs that have happened in all sorts of economies around the world, right? So that concept of a bank run does happen. You lose trust in your financial institutions. You essentially go line up on a Saturday morning and you demand your money and then they run out, right? But all that, coming back to your question, is, yes, money is moving digitally. You're online, you're doing your banking, you're paying your bill, you're doing this, you're doing that. I think most people still associate banking with that deposit-taking entity that basically holds your fiat.
Yeah, exactly. IOUs, some people would say.
Yeah, exactly.
Yeah, exactly. So you're in the custodial services space. Broadly speaking, I'll ask you about Tetra specifically in a moment, but how do you see the balance between the importance of providing secure custodial services while at the same time maintaining the rights of especially individuals, I suppose, to self-custody? Are those things on opposite sides of the same spectrum, or are they maybe for different people?
I think they would be for different people, and we heard from Joel today, right?
Joel Lightbound.
Talking about, having the right, a fundamental right to self-custody. And I think, at Tetra Trust or, generally speaking in the framework, we still agree that, there should be a right to self-custody. I self-custody, my digital assets. I think the majority of people in our team does as well, and I would encourage that. That being said, I don't think my mom would self-custody her own digital assets, right? Because there's a certain level of complexity to it. It is technical at the end of the day. And more importantly, I would say, the last 15 years are littered with people losing their keys and losing their access to their Bitcoin, right? So there's always that risk when you're doing that self-custody that you might actually lose access to your asset.
Yeah.
So when you look at the Canadian framework around digital asset custody, I mean, at the end of the day, the framework we are operating on came from the Quadriga CX failure, right? And I would say that's why Canada was early in their framework, arguing that you can't essentially be buying digital assets on an exchange or a crypto trading platform, I should say, and essentially trusting somebody, a third party, to basically hold your digital assets, right? So they needed to create a regulatory wrapper, not different from what you see in TradFi, essentially how your Apple share is stored. So I do believe there's a need for both. I wouldn't say they're necessarily opposite. I think they work together. There are some people that will do self-custody and continue to do self-custody, and that should be a right. And then there are people that will decide to not do self-custody for all the different issues they may see, and might instead decide that I want to work with a trusted institution that's properly governed, that's regulated, that is essentially I can trust, and that's where Tetra Trust comes in.
What about companies? Like we hear a lot about companies putting crypto on their balance sheets, most notoriously, Michael Saylor and MicroStrategy, but also KPMG Canada, for example. How do they do it?
It's really interesting. Actually, I would say a growing topic. So historically, a lot of organizations have had to get comfortable with managing their own digital assets, right?
Okay.
So KPMG, for example, would have their own digital asset custody as an organization. So they custody their own digital assets. Same thing for, Michael Saylor and his organization. But now what you're seeing is a lot of people are putting a digital asset on their balance sheet through the ETFs that were approved in the US, right?
Yeah.
So you saw that a lot in the Q1 filings, essentially even Canadian organizations like the Bank of Montreal, some pension plans, et cetera, have reported that they now hold Bitcoin as part of their balance sheet, but it's done through the ETF. So in that segment or in that framework, you essentially don't need to custody yourself.
No.
Ultimately, whether it be self-custody, custody through a third-party custodian or qualified custodian like Tetra, or through an ETF provider, I think all really good options. It just depends on your level of sophistication, comfort, and also like the friction and on and off ramping, right? Like at the end of the day, an ETF is pretty tradable, obviously. So they can
although not 24/7 like Bitcoin.
Yeah, correct. But they can still get off that position pretty quickly versus probably the friction on a self-custody basis.
Yeah, I'm saying this because it's a long weekend, right? So, I mean, if you buy an ETF right now, if you still can, I think, maybe for 15 minutes.
Yeah, but it's going to settle on Tuesday.
That's it. That's what I mean. Yeah. Exactly. I know a topic here that's close to your heart as well is the sort of, national custody versus, having your assets custodied somewhere else on the planet, which is somewhat counterintuitive for digital assets that are inherently global.
Yep. Can
you speak to a little bit of the importance for maybe certain actors to have their assets custodied in Canada and not, for example, south of the border?
Yeah, I mean, I think I think the Canadian custody angle is incredibly important, right?
Okay.
There's a couple of issues with my view is the current framework. So first of all, what most Canadians would know is if they're buying digital assets on the variety of platforms that are available to them, the majority of them are doing U.S. custody at the moment, which means by very definition, your digital assets that you've purchased on a trusted platform is essentially exposed to the U.S. regulatory environment. Mm-hmm. So yes, we all know that, Gary Gensler is suing everybody and there's a negative view right now, at the U.S. government layer. But there's also concepts like the Patriot Act, right? Mm-hmm. Which means that they can basically seize or look at any kind of information they want. They don't have to tell anybody. Now, when you're buying a Bitcoin on a platform, they're not telling you that, right? You're trusting essentially that they're keeping your digital assets, they're going to protect it. And when you're really ready to check out, either by moving it to your own personal wallet or self-custody, or because you want to trade it, that's going to be available there for you to trade. You're taking a huge assumption when the assets aren't custodied in Canada, right?
Maybe even more so at a time when political volatility, let's say, is high globally, including in Western countries.
Correct. So now the good news for Canadians is that there are no platforms using frameworks in other jurisdictions except for the U.S. and Canada.
Okay.
But we're a big proponent of bringing the assets back to Canada, mm-hmm. right? Whether we like it or not, we have a very strong and clear framework in Canada for digital asset custody. It's very robust. It's been designed, I think, with the right thinking. And there's an incredible amount of advantage to have your assets in Canada. So we would argue all the time, right, that the assets should be in Canada. The keys and the control should be in Canada. and we should try to avoid as much as possible exposing ourselves to other jurisdictions or what we would call jurisdictional risk.
Jurisdictional risk, yeah. It's like a cross-jurisdictional risk, I guess.
Yes.
Finally, Tetra Trust, what's the latest news or any exclusive that you can share with us for 2024 at least?
Yeah, no, I think the exclusive is, obviously the tide lifts off all boats. So we're very happy to be in a growing market again, right? And, we're, we've expanded the team, we've expanded our product suite. We are engaged in a lot of really strong strategic conversations with the Canadian ecosystem. What I find particularly interesting is that, when it's time to build, because the activity is not that great, everybody's hiding from the digital asset space. And now that the digital assets are out, it's everybody's priority. So I would just say not specifically for Tetra, but I think Canadians should be pretty excited. There's going to be a lot of, I think, really interesting products that are going to come out in 2024. And more importantly, Canadians can trust that those products are going to be launched with Tetra, which means that they're going to be properly secured and regulated under a Canadian framework.
Speaking of policy, and maybe final note, you mentioned Joel Lightbound, who was here. I mean, I think he was very appreciated, especially as a liberal, perhaps more so. What will be your message to the current or perhaps an upcoming government on, what they should be doing to ensure the balance between, I guess, protecting consumers, because there is still a lot of fraud in the crypto space, of course, but also promoting innovation and making sure that Canada, is the leader that it should have always been, basically.
Yeah, I think that's a good point. I find it disappointing, actually, that Canada was such a leader in 2018, 19, 20, even 21 in terms of their regulated framework, and that now that seems to have taken a little bit of a step back. Their narrative at the government right now is I would argue, non-existent. No, it's not a great thing, right?
Even in the opposition.
Yeah,
you don't hear about it.
Correct. So they're I would say both sides are hiding from it, and I don't think you can hide from it, which is essentially what was Joel's point, in my view, today, right? This is coming. This is here. This is happening. More Canadians are using this infrastructure, and we need to be able to take the necessary steps to ensure we're protecting investors. We're protecting Canadians when they're engaging with the ecosystem, right? So what we would like to see at Tetra is more regulatory clarity on various of aspects, probably the federal government being involved in some of our discussions as well, right?
Yeah.
And more engagement with the industry, I think would be welcome, as opposed to pretending that like it doesn't exist. The statistics are that, you're going to have 1/3 of the country at some point on this technology in the next few years. And you're already seeing it in the U.S. I think whether you like it or not, they're putting it on the ticket for this year's election.
Yeah. Trump was a notable sort of departure recently.
Yeah, correct. And he's, whether we like him or not, he understands there's 52 million Americans that care about this.
Yeah.
And, he's going to try to rally as many of them as possible by, being supportive. I would certainly suggest that the government starts paying attention to the space, because this is important. This is growing. It's here. It's not going anywhere. And I think people like Joel are essentially leaders in, thought leaders when it comes to digital assets in the country.
Yeah, wonderful. Shout out to Joel. Thank you very much, Didier. Pleasure to speak with you again.
Take care.